Today we're going to discuss the better way to use the wheel strategy with options, especially as it relates to Yieldmax and Defiance funds. These funds help me earn over $500,000 per year in dividends, as you can see below. And our performance and value shows that we're beating all the indexes. Once again, we're up 28% for the year. This just blows away all the other indexes, as you can see below. And on a daily basis, we're up 6,000 or 0.5%. And that also blows away the indexes, as you can see above. I don't know of any other YouTube channel out there getting better days gains, better performance, and better dividends. And I also don't know of another YouTube channel who uses the wheel strategy with options like I do, okay? I think the wheel strategy can make you money, yes, but I also think my way beats the traditional way of using the wheel strategy, and I'll share with you how I do that in this video. I'm going to give you 3 reasons why I don't like to use the wheel in the traditional fashion that everyone else does. So first of all, my dividends of over $500,000 will pay back my margin debt in less than 1 year, and these dividends help me live free from 9 to 5. If you need help doing the same, email me for my e-guides at akintalk48@gmail.com. My dividends pay back my margin debt, and then my account grows by that equivalent amount. I don't worry about the interest on my margin debt because I've negotiated down twice. The recent rate cut also lowered my margin, and many of my clients who bought my e-guides were able to lower their margin rates as well, because when you buy my e-guides, you get my phone number for life. I had a few client calls today. All I do is answer client calls and respond back to my client's text. If you saw my last video, you saw that my entire Rolodex on my phone, 90% of my contacts on my phone are pretty much my clients from YouTube, and everyone who bought my e-guides got my phone number and Discord access for free for life. I don't know of a better value than this on any other YouTube channel. I sell options the way I do because they help me get my performance, and I don't know why everyone likes to sell calls, first of all, because I have a lot of funds that, yes, make me a lot of money on up days. As you can see today, we're up 6,000 today. And I don't want to sell calls on these funds because then they'll cap my upside. Also, when I own a lot of the funds that y'all own to get more premiums, that takes up your margin debt, and then that gives you more leverage, okay? And even if you don't have margin debt, if you're selling a bunch of calls on your positions, not only do you risk getting called away and capping your upside, but you fall by the amount of your position in the event of a market downturn. So I feel like selling calls are pretty risky. The premiums that you receive from the sold calls don't really give you that much of a buffer to the downside. I like to use indexes at my channel, okay? You know that all I use are indexes here. For example, Cornerstone is one of my largest index plays. It's a 4-star fund. It moves up or left or right on its chart, as you can see here. So I keep Cornerstone and I keep Defiance as my index plays. Well, Cornerstone doesn't even have options, and QQY, you don't want to be selling calls with QQY because there really is no upside to get premiums with. So I don't really sell calls on these funds. You really can't. Cornerstone helps me in so many ways. It helps me with the special drip. I grow my dividends every month. It gives me 20% premiums per year before the rights offerings. Again, just play it properly between the rights offerings. And I can box Cornerstone and short against it to protect my position there versus selling calls. You know, that doesn't really protect your position as well. When I sell short Cornerstone and box it against my long, it lowers my maintenance to 5%, okay? 5%. Cornerstone is 30% maintenance, but I lower it to 5 when I box it. If you need help understanding maintenance, that's in my Volume 3 e-guide. Okay, so I don't want to sell calls on my positions because I either can't sell calls on them, or if I'm in something like a U-Pro or something that's really moving well with the indexes, I don't want to sell calls because then I cap my upside, okay? And I don't want to buy too much of one thing and sell calls that way because you have more risk as you just buy more shares to sell calls on. So you have to sell a lot of options to matter, a lot of calls to matter to really make any money and lower your margin. And then that just increases your risk. And if you sell more puts to get more premiums, now you're exponentially increasing your risk. Selling puts isn't risky, but when you combine it with a losing position, it is risky. You don't want to be catching a falling knife. You want to only sell puts on the indexes, in my opinion. You don't want to be selling puts or calls on anything else that's not index related, or a certain asset class that's high quality like Bitcoin that has high premium. I'll sell puts on Bitcoin. I will not sell calls on Bitcoin because, again, you risk getting called away and you don't want to lose potential upside with something like Bitcoin, okay? So I don't like selling calls for those reasons that I just listed. And also, again, when you sell calls and puts with short-term options, okay, you have to sell a lot more to matter, and then that just increases your risk exponentially because your assignment risk increases as it's shorter term, and you have lower premiums, so it doesn't really lower your cost basis, so it doesn't lower your risk. And then again, you have to sell a lot to matter, which sucks up all of your equity, okay? When you're living the FIRE lifestyle, you have to preserve your equity. That's why I like low maintenance names, 30% maintenance names. If I box Cornerstone, then it's 5% maintenance. And so I can withstand over 20% corrections at all times and still avoid a margin call and still withdraw freely out of my account to pay my bills. All of my bills are automated out of my E-Trade account. And again, I'm not worried about a margin call because my dividends of $50,000 or so per month pay back my margin debt every month, and that gives me more cushion, okay, more equity every month. So I stay away from margin calls as my leverage disappears each month. And then I have these low maintenance names that also preserves my equity. And so when you sell a bunch of calls, or if you own a bunch of shares and then you have to sell calls, well, then you're still adding to your margin debt and you're still adding to your leverage, and those calls don't really act as a buffer on the downside if the whole position were to fall. And if you're selling a bunch of puts to make a difference, a bunch of short-term puts, well, then you're exponentially increasing your risk and lowering your available withdrawal because you have to do a lot to matter, and then that sucks up all of your equity. Again, if you need help understanding maintenance and equity, that's in my Volume 3 e-guide. Point 1, why I don't like to use the wheel like everyone else, because when you sell calls, you're just adding more risk to your positions because you have to have the position. You have to own the position to sell calls. And so I don't want to own more shares than I have to because that adds more margin leverage. And the only thing that's helping me offset the pain of the downside are these options premiums, which aren't enough, okay? So you might have your upside capped if you sell calls, so why do that? You want to sell calls in a sideways market or when you think things are pulling back. But if that happens, then the premiums aren't really worth as much anymore. You have to time them perfectly, okay? And if you sell puts, you might get a sign on these puts. What if the thing drops out from underneath you because you're buying a stock or a riskier type of index? You don't want to sell puts, short-term puts. You never know what can happen. But I sell leaps. This is the third point that I have for y'all, is not only why I don't like to use the wheel like everyone else, but how I like to use the wheel instead to get better performance and more income. Because what I do is I sell puts and I sell leaps, and then that lowers my margin by a lot more, and then I only have to sell one contract to get my margin down. I sold one contract on Coney, and so that's $1,500 that I received on Coney, and that lowered my margin debt by $1,500. But if I was doing a short-term option on Coney, the premiums would be a lot less. That would lower my cost basis by a lot less and my margin by a lot less. So $15, I lowered my risk significantly. $30 strike price minus $15 of premiums. Now my cost basis is around 15, which is lower than where everyone else was controlling it at the time. And then that lowered my margin by $1,500. So if I get assigned in Coney, well, then I'm going to be assigned at these lows, and then I'm going to get more income in the process as we go higher and more days gains potential. Plus, I take these higher premiums and then I reinvest them elsewhere for more income. Okay, that's how I keep growing my income so much. I sell these options. I have about $50,000 worth of premiums that I received from selling these options on Yieldmax and Defiance. IWMY, we received about $4,500 there from IWMY. My favorite is QQQY because QQQY, as you can see here, look at the maintenance on QQQY. When I sell these naked puts, see, I don't like to own the shares because the shares are risky. If you own the shares outright, you have to fall by that equivalent amount, and then the premiums that you receive from selling the calls barely offset your losses. Whereas with QQQY, my naked put is 20% maintenance, okay? Once again, if you need help understanding maintenance, that's in my Volume 3 e-guide. And if you need help selling options like I do, that's in my Volume 6 e-guide. So look at how we lowered our maintenance to 20% naked puts with QQY. We lowered our cost basis significantly. We lowered our risk significantly. So this is my preferred way to use the wheel, okay? I sell these leaps that lowers my margin by a ton more, lowers my risk by a ton more, and I'm only doing one contract or so in most of these, which means that I only have to fork over $3,000 if I get assigned in something like Coney, and then I have all of my puts diversified here so that not one put can take me down, and if I were to get assigned, I would just have more index diversification on top of my already index diversification, okay? All right, so if you need more help doing what I'm doing, email me for my e-guides at akintodd48@gmail.com. When you buy my e-guides, Discord is free for life. We have one of the best Discord chat rooms in the world. I think we have over 1,000 members here in the Discord chat room pursuing the FIRE lifestyle. Also, don't forget we use put options to insure our account. So if anyone thinks that I'm going to die in the event of a market crash, well, look at how we did in 2022. Look at how we did last month. My put options were up almost 2,000% during the month of August. They were up 800% alone on that Black Monday crash. So I always have my put options on as well, just in case the market decides to have over a 20% correction. If you need help buying put options for insurance, that's in my volume 5 e-guide. So again, call me if you need anything. When you call me, make sure to text me first so that I can save your number. That way I have a heads up when you call and it won't go straight to voicemail, okay? Also, if you like this video, click like or subscribe, and I'll talk to you soon, everyone. Thanks.